Welcome back, Forever Pay Squad. This is Market Making episode 10. And in this episode, we'll be talking about New Zealand dollar yet once again. And I can't wait to get into this one. So, you already know how it goes. Run my intro. Hey friends and new traders, welcome back to the channel. If you're new here, my name is Matt and I teach day traders just like you how to become profitable by teaching different tips and strategies. With that being said, let's get into this one. New Zealand dollar, pretty much last week. If you watched my last week video, I said that the market is potentially heading for this level, which is a low, probably a low from 2020. And I said the market will be heading to take this low out, and the market is still very, very bearish. So for earlier in the week, though, last week, you can see that the market did pull back quite a bit, and it did take out this high. So that may have tripped up a lot of traders thinking the market is going to go long. And it did for a little bit. It did. It pulled back. And then it took out this high again. So you might have thought, the market is bearish now. Let's trade. The market is bullish now. Let's go what buys. But nope. Overall, I still was bearish, pretty bearish. Everything, all my MAs were telling me is still pretty much bearish. The 4-hour MA was not even broken. And the only MA that was broken was the 1 hour, and that wasn't good enough for me. I needed more. Like, I needed this price movement to go a lot more higher. I would have liked to seen it go a lot more higher. For me, I knew it was still bearish, but I wasn't sure exactly where the pullback was going to. So for me, I pulled out the Fibonacci on the daily to see exactly like what it could possibly do. I had possibly aiming for the 38 on the daily Fibonacci. And if I go to my 4-hour, it was kind of confluence at the time with the MA on the 4-hour. So, and we had some resistance right there. So I thought it might have pulled back up to that level, because that's like 3 confluences. So I would have taken a short there. But I noticed that the market did have a lot of forever pay gaps right here, which the market needs to fill in before it went any higher. And one of my secrets, which I talked about in one of my previous Market Making Monday series episodes, is once you see the market take out a high and you have like a forever pay gap here, it would like to pull back and then go up a bit and possibly pull back to fill in that gap and then go higher. So taking out this low and then going higher. But just the way that it failed to go higher than this, like it went a little bit higher but not a lot. Like you can see, like it respected that level right there. I knew that price was just gonna go much more lower. I just needed to figure out, hey, where can I get in to go bearish? So this was early in this week, and then Thursday we had this move going up, and then Friday we had this major move coming down. So let me break down this actual trade setup for you guys. So breaking down the chart even further, we can see that I was kind of hesitant to get in. I missed this setup right here because I didn't see it. But once this move happened, this pull up here, this pullback right here, I was able to draw a trend line from here to here, and then I noticed the moving average was like right there as well, the 4 hour moving average. So I'm just like, okay. Plus there's resistance, so I'm like, okay, the chart is gonna probably break down, and then by 9 o'clock, I seen the market pull all the way down to here by the end of 9 o'clock. I'm like, all right. And after I thought the market might have like pulled back up to here, but then once it pulled back right here, I seen this on the 15-minute, so you could clearly see what I did with my trade entry secrets that I always talk about. So I was able to find a counter trend line going up, price broke down and retraced back to the counter trend line on the 15-minute or the 5-minute, whichever one you want to take, and then it respected it and price broke down. And on top of that, we had news release, and after news release, price didn't really 8:30 news release, price really just pulled back to here, and then it came back down. So then for confluences, as you can see, we have the 15-minute MA, we have the 38.2. And remind you, this is just to get in on, this is only to get in on the bigger trade, which is the 4 hour trade, which I'm going to show you the full picture of it. So this is just a 15-minute chart on Fibonacci. So from high to low, it pulled back, respected the 38.2, respected the counter trend line, and respected resistance. Plus we have the 15-minute MA, and then we had this engulfing candle, which I entered right after it. And then news obviously came back out. I had my stop above this high, and then price came back again and tested it. And as you can see, if I stretch this out a bit, you can see I was pretty close to getting stopped out. 25 pip stop loss. So, and price respected it once again and broke down. Once I seen it come back down below, plus I had another trend line going as well on the 15-minute, and it pulled above it and then came right back down below it. Once I seen that, I'm just like, okay, it's all good. It's all good. It's gonna break down, and then as you can see, price just melted right after that. And this is not even my actual target. As you can see, I said it's based off of 4 hours. So, and as you can see, this went way past the negative 61.8 on the 15-minute. But as I've been saying for the last couple of weeks, my target is actually all the way down here. So I could move that all the way down here, and that is going to be a 1 to 8 trade. And why do I have this target? Because that is a previous low that I said the market is going to want to take out. So the actual move, which I missed up here, but I actually was able to find a spot to get in at right here, is this move right here. So you could go from high to low on the 4 hour Fibonacci. And you can see that it's respected in the 50. Let me take off this lower time frame Fibonacci. You can see clearly. You see that it respected the 50% retracement level. Previous resistance, we have the trend line, and we have the MA. So I I wish I was able to get in right here, but it's okay. I'm still able to get in right here, and I'm currently still in this trade. Um, so for next week, starting Monday, for this week, starting Monday, I'm expecting price to either, which I'm really hoping prices continues as soon as the market opens, continues to go down. Does it not really retrace? If it does, it's okay. If it does retrace, it's going to come up to like probably right here because we do have this gap right here. Starting right here, we have this gap, forever pay gap. And we do have also resistance right here. So that'll be an area of where I'll be looking to possibly get in again. If I do start to see a pullback, I will take something off. But I'm really thinking that that's the way the market was going on Friday. I think it's just going to continue going bearish. And I'm hoping it just continues to go below this level and then uses this level as an area of resistance instead of this area. So, and then as you can see, my negative 27 does align with that area of liquidity, which I said the price is headed to for the last couple of weeks. Last 2 weeks, I've been saying that. So that is my prediction for next week in the market. So I hope you guys found this video valuable. Please share, like, comment, and subscribe to the channel. Hit the notification button and enjoy y'all day, evening, night, weekend, whenever you decide to watch this video. Hope you guys have a blessed one. I am out. Peace.